Hi everyone, welcome back. Today we are going over the Coca-Cola company, stock ticker symbol KO, currently trading at $58.24. Now the company is trading between its 52-week low and 52-week high between $51 and $64 with a PE ratio of 2360 and the earnings per share of 2.47 and a nice dividend yield of 3.14. Now, looking at the 10K of the company, risk related to operations, I do have it highlighted right here. They did announce the suspension of its business in Russia. That was the sanctions. And because of the war, they also are having a bad time in Ukraine and probably in Israel as well. Now, looking at the 10K of the company, the risk related to operations, which is something we should all see when looking at a company, and as you can see they actually mention right here the business in Russia is suspended due to the war. In Ukraine it might not be so well as well, and also in Israel they don't have mention it here, but it should have taken some loss as well. Now, moving on to the dividend history of the company, we can see that they have a phenomenal 60 years of dividend growth and 60 years of consecutive dividend payments, which is great to see that. From 1990 till now on the chart, they have been growing their dividends without any cuts at all. They've just been growing steadily, which is great to see. And they are estimated to keep growing their dividends over the coming years. Now, as you can see on their website, they have all the brands they own, and it's nice to see that they're not just about their iconic brand, Coke. They have Costa Coffee, Dasani, Minute Maid, Smart Water, Vitamin Waters. So they're a very diversified company. They have from waters to coffee to tea, a lot of beverages. Nice to see that in a company. Also, I found these news of them having unveiled a 2030 water security strategy. Great to see that. I think it was an interesting news just to mention. Now, moving on to the spreadsheet, but before we begin, if you like my spreadsheet, you can just go to my Patreon page. There you'll be able to download it, have full access to it, and do your own research on it. Also, if you like the video, please hit the like button and subscribe. It would be much appreciated. So we are going to zoom in right here to take a look at the chart, 2 year chart, and as you can see from its 2 year chart, it didn't move much. It did some ups and down, but it did keep in the range. Looking at some of this data, we can see they have a really nice return on equity, return on investment, and the margin, especially the profit margin at 24%. That's actually pretty good. Now, do keep in mind they have a beta of 0.59, so this company is not to move a lot. It's never going to move a lot. uh, Going into companies such as Coca-Cola, you want to go in for the dividends, not for the growth. It's never going to grow that much, but you want a nice company with a steady dividend. That's what you're looking for in Coca-Cola. That's what I'm going for, and just do keep that in mind. Now, what we have over here is the price target from some analysts such as JP Morgan, Citigroup, Wells Fargo, and the average they come up with is at $66. And down here, what we have is the average sector PE. So knowing that their sector PE is a consumer defensive of 2114, and we know Coca-Cola's PE ratio is at 23, so currently trading just a little above the sector's average. It's not that bad. It would be a red flag if it's at 30, 35, or 40, but at 23, it's not that big of a deal. Now, moving on to the valuations, we are going to start off with the discounted cash flow valuation. So we plugged in stock ticker symbol KO, and all of the data in blue automatically filled in. All we had to do was check if the 10-year risk-free rate was correct, and then we moved on to getting the data from the past free cash flow of the company for the last 10 years. We do have a link right here. And once we plug in the data, the growth rate automatically fills in, and we get an average of 3.74 with the S&P 500 30-year growth rate with adjusted inflation 7.22, we get an average of 5%, which then gives us a future free cash flow of the company and finds us our intrinsic value of 26.27. That's for our first valuation. Next, we have the unlevered discounted cash flow valuation, a much more simpler valuation. All we do is plug in the enterprise value, the net debt. This automatically fills in and finds us our intrinsic value of $57.09. Next, we have one of my favorite valuations, the PE-based valuation, which takes the 5-year high PE, the 5-year low PE to find an average in our growth rate projection to find us an intrinsic value of $53.85, also with a 10-year future intrinsic value of $139. Do keep in mind this is an estimation. Next, we have the dividend discount valuation, which we take the dividend payout of the company to get the yearly dividends and the growth rate of the company. Giving a 3.56, we are going with a growth rate projection of 4%. And we find the intrinsic value of $67.20. Next, we have the multiples valuation, which takes Coca-Cola's competitors' stock price, earnings per share to find the PE multiple to then give us an average. I do use the median PE, and we find the intrinsic value at 81.27. Again, another one of my favorite valuations, the discounted earnings valuation. All we have to do is plug in the growth rate, everything automatically fills in, and what it does, it takes the earnings per share, take it to the future, find the intrinsic value, and what we do next is bring it to the present to find our intrinsic value of $102. And for the last valuation, we have Benjamin Graham's valuation, which what we do is plug in the growth rate of the company, check if the AAA corporate bonds is correct, and giving us an intrinsic value of 21.40. And last, we have Peter Lynch confirmation. This is just for confirmation if it's overvalued, fairly valued, undervalued. And the result comes at 0.37, meaning the company is overvalued at the current moment. Now, do keep in mind, for a company such as Coca-Cola, it typically tends to trade always at the intrinsic value or at premium, never too much at a discount. So maybe that's why it's showing at overvalued levels. Finally, we have some ratios over here, and as you can see, they all came out positive. The only one negative came out was the debt to equity ratio, and that's because our limit's at 1.50 and it came out with 1.52. So not big of a deal. It's not that way above, nothing too much. And finally, we have the dividend safety, just to check if the dividend is safe. And with the 72.98, it's not that bad. It would be a red flag if it was over 100, but at 72.98, it's not that bad. Now, into the final valuation, where we take all the results we got and we average it down to find the intrinsic value of 64.66. Now, I do not include Benjamin Graham's formula, and the reason for that is all the other ones are better. There's no need to use it. I only use it in case one of these valuations comes out with a negative number or I don't have sufficient data to fill one of them. Okay, so with this, we find out that it is currently above its current price at 9%, and with a margin of safety, our acceptable buy price would be at 51.73. I did already allocate 40%. And the reason for that is we missed a really big opportunity right here on October on the demand zone. I will put in 35% if it hits this level again, and another 25 if it comes even lower at 48. And as you can see, this level right here was at 52, which would be exactly near our acceptable buy price, really accurate. It'd be great if it would reach there again. So with this, we conclude the episode for Coca-Cola. I hope you enjoyed it. Also, if you liked the video, please hit the like button and subscribe. And again, if you like the spreadsheet, you can just go to my Patreon page. The link will be down below. There you'll be able to download it, have full access to it, and do your own research on it. Again, thank you for tuning in, and I hope you enjoyed it, and see you next time.